All right, all right, all right. Hi everyone. Hi everyone. Sincere apologies for kicking off tonight's live session really late. As you can see, I'm not at my usual studio, so it's not my usual background. But regardless, we'll kick off tonight's live. Yeah, we'll kick off tonight's live regardless. But I want to say a big thank you to all of you who keep showing up every single time, who keep showing up for all of this. I mean, it means a lot to me. It means a lot to me. As a small creator, I mean, call it whatever you like, but as a small creator, you see, I think the consistency for one. You see, sometimes when people talk about creating content, talk about pushing value online and things like that. Most of the time, people only see themselves. You see, they talk about, oh, they are consistent, they are learning value, they are pushing value, they are doing great things, they are doing big things out there. Scarcely do people talk about how that their community themselves are a big impact as to how they got to where they are. And I think for one, I think I appreciate every single person that has always been consistent, always watching, always sticking around. I mean, it means a lot. I've had some regular persons who keep coming again and again and again and again just to get as much value as they can get. It really means a lot to us, guys. It really means a lot to us, guys. And as you're aware, please, guys, we have the goal of hitting 1K subscribers on YouTube. The goal of hitting 1K subscribers on YouTube, help us to hit 1K subscribers on YouTube. You can see that my eyes are a bit here and there. I'm trying to sort some other things too on the side, but we'll be kicking off tonight's session shortly. Moments. Yes, I think it's stable now. I think it's stable now. So let me just. Aha. Yes. So, welcome again, everyone. Welcome to tonight's session. I'm so glad to have you guys here. I'm so glad to have you guys here. Um, yes. So tonight I'm going to be doing something unconventional. I mean, I don't usually do this. I don't usually talk about it. I try to avoid it a bit until I've learned a lot. You see, I've seen many industry leaders who talk about making money, finance, and things like that. But finance is a very sensitive topic. It's a very sensitive topic that people I feel that people should not just hop into because they feel that they can or because they feel that they have a simple knowledge about it. I think you need track record. I think you need a good track record over time, the kinds of track records that makes you credible, makes you someone that is credible, track records that you're able to build and makes you credible and makes you someone in the industry, someone that stands out in the industry. And that's one of the major reasons why I've always avoided talking about money and finance. But you see, I've been in this sports gamer 500 says, yes, I'm from Nigeria. My name is Temitoka Ajayi. Welcome to my channel. Please help us hit 1K subscribers on YouTube. We're trying to hit 1K subscribers on YouTube, guys. Help us hit 1K subscribers on YouTube. All right. So what I was saying, when we talk about finance, and I try to avoid the topic most of the time because you see it's a very sensitive topic. It's a really really sensitive topic. People don't want to let their money off. People don't want to let go of their money just because someone is telling them that there's value somewhere and things like that. And many other times, many persons fall for Ponzi scheme. You're asking about my work. Yes, so I'm an AI enthusiast and an AI consultant. I work for several organizations in Lagos, Nigeria, and I also consult for other businesses in different parts of the world. I think I'm currently working with some guys in the US and some guys in India at the moment. All right, so that's a little bit about me. Anyways, I'm more of the AI person, but I like to be a bit versatile because I like to learn a lot. I think they say curiosity killed the cat, but I mean curiosity made me who I am. So curiosity drove me into tech. I've been in tech for more than 5 years now. Yes, I've been in tech for more than 5 years now. I have built several kinds of tech products, ranging from SaaS products to ERP to LRMS and several products like that. At some point, it got a bit, I think, due to life and several things like that, I had to venture into artificial intelligence as well, and I started building artificial intelligence. Currently, I'm helping a team in the US build an artificial intelligence tool that helps with making investment decisions, finance decisions, and several things like that. So you see, I won't try to say much about it. I mean, when the product is launched, of course, I would speak a lot about it on my channel here if I am permitted to speak about it. Of course, there's all the NDAs and several things like that. But I'm sure that my team will want me to do free publicity for them. So, uh, but yeah, yes, I think that's a little bit about me. That's a little bit about me. And I talk a lot about several things. I talk a lot about personal growth. I talk a lot about personal growth. I talk a lot about artificial intelligence and professionals. I talk a lot about content. I talk a lot. I just try to diversify a bit because I'm someone who likes to read a lot. I like to read a lot. If you know me really well, you know that. And funny how I just developed the reading habit a few years ago, but I think I'm gradually making this a part of who I am, and I'm constantly trying to build that side of myself. So that's a little bit about me. If you're joining in, just let us know who you are, where you're joining from, what you do. So Sports Gamer 500. If you could let us know who you are, where you're joining us from, what you do, I think that would also be helpful and that would help to boost the conversation. So yes, I'm talking a bit about finance. I'm talking a bit about finance. And you see, for this subject of finance, I adventured into finance a couple of years ago, actually. And funny story. You see, I had started stocks trading even when I did not know I was doing stocks trading. So I had downloaded one of those apps, one of those broker firms. So I started buying stocks. I didn't really know what I was buying. I think I was more vested in crypto. So I was thinking, oh, I think I'm back now. Let me just confirm quickly that you guys can hear me. Can you guys hear me? I honestly doubt that. Okay, I think I'm back now. Yes, I am back. All right. So where was I? Where was I? Salty Art says hi, hi. I mean, there's a lot of names on YouTube, anyways. But yes, so I was talking about how that investors talk in matters of years, in really, really long time. I mean, they don't play the short term game. They don't even play. Some don't even play the mid term game. They play the long term game because that's when your assets become valuable. So one of the things I did not know then was that I did not know that I needed to play the long term game. But I was in it for the short term. I mean, I held for 1 month. I sold my I sold my portfolio and I emptied it out. Another time again, I went in there. I bought some stocks. I noticed the stock was going down. At some point, I sold it. And you see, this has been several things I've been doing over the years. But you know, it got to some point. I think about 2 years ago or thereabouts. I thought to myself that man, I think this is truly a means of growing finance. You see, if you check, there's a chart I kind of stumbled upon online, and I've seen several presentations where people talk about the most means in which people make money, and you see that the first two on the list, the first one is real estate. Most millionaires and billionaires are made via real estate. They are made via buying and selling of properties, lands, and real estate and things like that. And of course, you'd agree with me that in any place in the world, real estate is a sort of investment that you have to go into with your mind prepared because I mean it's very costly to get a piece of property. Some places are cheap though, but for some persons it's quite costly. Say for example, you're the kind of person that you are hustling, you are trying to feed yourself, and there's very little that is coming out into your savings and things like that. Before you can gather together and say, "Oh, I want to build a land portfolio, a land banking portfolio, or a real estate portfolio," it will take a very, very long time. So for such kinds of persons, I don't really advise such. But the next means in which people then make money, what is it? It's then stocks, which was very surprising. I mean, these same stocks that we've always heard of, stocks. Of course, we have this. Some person says, "Oh, it's risky. It's not safe. It's not this. It's not that." I mean, which sort of investment platform is not safe? Which sort of money growing platform is not safe? And one of the biggest things about it is that it's something you can learn. It's something you can learn. It's something you can build yourself. It's something you can build on by yourself. Something that you can understand how it works, learn how it works. And you see, I heard a popular saying that You don't have to be the best, the most knowledgeable. If you're just an average investor and you are diligent and disciplined, you can make several millions, if not billions, of whatever currency it is you're spending on. And I've seen people reflect this over and over and over again. Warren Buffett, I mean, you can't talk about stocks without talking about Warren Buffett. Most of us have heard of Warren Buffett. If you've heard of Warren Buffett, heard of him. I've heard of him. I've heard of him. You've heard of Warren Buffett before. Type I've heard of Warren Buffett. I've heard of Warren Buffett. I've heard of Warren Buffett. So Warren Buffett, I mean, is the modern day father of stocks, the modern day father of investments, and this man is really old. You would realize that he has spent most of his life since he was a boy, since he was a young boy. I think he was in his early teens. He was in his early teens. He stumbled upon a book called The Intelligent Investor by Benjamin Graham. And since he stumbled upon this book, he read the book, he started his journey into investment. Trust me, excuse me, please. He has had several ups and downs. He has had several high and lows, but eventually got to a point where he's counted amongst one of the top 10 richest men in the world. I mean, you can't count the top 10 richest men and not talk of Warren Buffett. I think he sits at number 5 or 6 or thereabouts. Warren Buffett is a billionaire. He's a billionaire. And you see, that's just building on stocks. Warren Buffett built his entire fortune on stocks. He built his company based on stocks, taking trades, holding stocks, and several things. That's how Warren Buffett built his fortune. So I'm trying to point out the fact that there's just so much potential. There's so much potential when it comes to stock trading. When it comes to holding stock, you don't have to be a trader. I think I need to rephrase my words. So you don't have to be a stocks trader. You don't have to be a trader to hold or to succeed when it comes to stocks. You can just be a normal person. You can be an average person. You can be an employee. You can be an employee, you can be a business owner, as long as you are disciplined. And there are several things which I'll be talking about for the next couple of minutes. I'm going to talking about the several things I did that I started safeguarding my portfolio. And I mean, I really decided to try this thing out. I decided to experiment. You see, after years of trying and failing, I decided to double down. I decided to learn these things. I decided that I shouldn't just do this thing because I'm hearing people do it. I mean, I've heard many persons hold stocks because they've heard their friends hold those particular stocks, or they've seen one news online. Somebody on YouTube said, "Oh, I want you to hold this particular stock," or maybe say Tesla, Apple, and several things like that. And they just rush and hold it because their friend says so. Let me shock you. Let me shock you. The moment the news of a particular for a particular stock or a particular indices has gone out, then it's no longer going to make as much for you. The moment it's in the news, the moment you can hear the news of a particular stocks in trade or wherever, you should know that that particular stock is no longer in vogue. That stock cannot make as much money as you expect. And I've seen many persons who hop into things like this and they make so much losses. You see, there was a stock that someone held that I know, and we both looked at these stocks together. I suspected that these stocks would have issues because I did several findings, research, and things like that. I suspected that this particular stock would have issues. And I mentioned to the person that you see this particular stock, let's just hold a little bit of it. Let's just hold a little bit of it. At least 1 to 3% of your portfolio. Hold about 1 to 3% of your portfolio with for this particular stock, because this particular stock, it's not good news. It's not good news. And lo and behold, thank God that person listened to me. Thank God that person listened to me. You realize that a couple of months after, we figured that the original amount we bought this stock, it had gone almost halfway below it. If this person had held a lot of that stock, this person would have made massive losses. And I mean massive losses, massive losses. Eventually, the person had to let go of the stock and several things like that. But I mean, that's dependent on you. But I'm going to be teaching you three things I did that I was able to use to build my portfolio over 50%. Guys, over 50%. I mean, some of these accounts I'm managing are private. I'm managing about 3 accounts currently. And out of these 3 accounts, for the last 11 months, 2 out of these 3 accounts has gone well over 50% in returns. And one of them is currently above 40%. It's currently above 40%. But if you are versatile with the stocks market, particularly stock market in Nigeria, you realize that the past 2, 3, 4 weeks, the market has been a bit slow. It has been a bit slow. For some persons that held some issues, you realize that some of those issues have dropped down. But issues are still stock, guys. Your issues are your stocks. It's just a term for naming your stocks. So some persons that held some issues. they realize that some of those issues have actually dropped down. Why? Because it's dividend season. I mean, dividend just got rolled out. For some persons, they made massive returns in dividends. They made massive returns in dividends. They made lots of money in dividends. So I don't know. I mean, so you realize that many a times, particularly in this season, after companies have just paid dividends, you realize that most of the time the market comes down. The market comes down because many persons are skeptical. Many persons just want to watch the market. Many persons don't want to take risks. Many persons want to see how they can put their money into other investments. Many will investors also are trying to calculate how they can reinvest in other growing businesses and several things. That are many persons are doing lots of back and forth. I mean, dependent on whoever is doing whatever analysis that they are doing. But for most persons, for most investors, this is the period for you to start buying. This is the period for you to start buying. And this was one of the things I did. You see, I started analyzing the market. And by analyzing the market, you see, it's a lot of boring work. It's a lot of boring work. You see, financial analysts do lots of boring work. You start to read financial reports. You start to read news about the companies. You start to read several things like that, which can be really boring. Sometimes I spend hours upon hours reading about KFX, spend hours upon hours looking for financial reports for different organizations. You see, AI has even made it better for me sometimes. AI just helps me to reference and find all of these things I'm looking for. And immediately I find it, I go in there, I find what I want. I spend hours and hours trying to read, trying to analyze, trying to check out all of these different companies. So it's very important that as a stocks trader, you do your analysis. You don't have to pick all the companies that are available. You don't have to pick. Somebody can come and meet you today and say that this particular stock that is in vogue, I want you to buy it. It's very good. It's making a lot of money. I've made lots of money from it. Usually, don't listen to them. I One principle I gave myself is I have about 15 to 20 stocks I can buy. 15 to 20 stock. Now, out of that number, I keep changing it over the periods. Like every three months, I do a sort of analysis. Okay, which one should I hold more? Which one should I hold less? I wouldn't want to hold. I know that there are several laws around holding stocks, which are, of course, I don't argue with any of those. There are several rules around it. Some persons say you should hold between 15 and 30 stocks, which also makes sense. It makes lots of sense. But I personally, I don't like to hold more than 8 to 15. 8 to 15 stocks and that's it. 8 to 15 stocks and that's it. Most of the times I even let some stocks go. I let some stocks go. Maybe because those stocks I see they're not performing well, or maybe I'm hearing some news that I'm not really interested in and some things like that. Immediately I try to move my assets into other places. But I don't do this all the time. I only do this strategically. And there are several things that you do, particularly when you are making your analysis. I've talked about the financial analysis side of things. It's important to analyze the company that you're looking at. Now, the second thing I did, which was very, very important, and which I want you guys to listen to, is that aside from just analyzing the market, I had to look at their books. This is a part that many people miss. It's a serious part that many people miss. Many people fail to look at the books of the organizations you are buying into. By books, what do I mean? You look at their income sheet, you look at their balance sheet, you look at all their financial reports, all of those their reports, you go through all of them. Are they making profits? Are they making losses? What profit did they make last year compared to this year? Sometimes you need to go back and check for about 5, 10 years. Sometimes you need to check about 5, 10 years sometimes, just to try and analyze that. Okay, how has this particular organization been performing for the last 5 years? These things can be painstaking. That's why it's not easy for me to just pick a stock and say, oh, this stock, it is it. No, I don't just pick a stock and say, oh, this stock, that's what I want to pick and I'm buying it without doing all of this analysis. So I do all of this analysis. I do all of this fundamental analysis. I check their books. I check all of those things. I go back 5 years. I check all of those things. I check their records. I check their books. Most of the time, some companies can be very deceptive. They can be very deceptive. Sometimes they can make some profits and they reported that they have a good year or they had a bad year. Sometimes they can make less profit and then they report like as if, oh, they made so much profit and several things. I won't mention names. I won't say companies that are lying really, but there are several companies that you see that even in their CEOs reports, you will see different kinds of things that you would make you wonder that what are these guys saying, because what they are saying is not correlating with what their reports is saying. But if you're not the kind of person that can sit down and read the boring stuff, trust me, you are wasting your time. You won't be able to pick the right stock. You won't be able to pick the right indices that you want to pick. And most of the time, many persons fall for sham. Many persons fall for some of these trickeries and several things like that. So another thing I do is that I look at their books. I look at their books in details. So I don't just do my fundamental analysis. I don't just research about the company. I look at their books. I look at their accounts. I look at several things like that. And you see, the third thing that I did was after looking at their books, after analyzing and doing several sorts of analysis. You see, there's like a master class for these things I'm talking about. There's a master class. I mean, when we start to talk about investment, when we start to talk about stocks trading and investments, you can't do without looking at the book Intelligent Investor by Benjamin Graham. That book is loaded. If you've not read the book before, I advise you to go and pick up that book and read it. Intelligent Investor by Benjamin Graham. I think I have the book here. I brought it along with me in my travels, but it's not exactly on my desk here. So, but I'll pick it later. But the Intelligent Investor by Benjamin Graham, it teaches you different logics you are looking out for. It lets you know that the stock market is not a friendly market. Some persons go into the stock market thinking that the market will favor them. There are some stocks that are really good. There are some stocks that are really nice. If you buy these stocks, it's guaranteed for life. There is no such thing. There is no such thing. Guys, you need to be wise. There is no such thing. And this is one of the things I learned very early on. I told you guys, I bought this particular issue. I bought it sometime last year, and we analyzed this thing. We looked at it that this particular issue, it won't do well on the long run. But we decided to hold a very small portion of it. And we had a very small portion of it. Thank God we held a very small portion of it. Otherwise, we would have made massive losses. We would have made massive losses, particularly in holding that particular stocks. So there are several things I can start to talk about when it comes to stocks, when it comes to investments. I mean, say for example, how it's advisable that you don't just hold stocks, you hold your bonds and several things like that. You don't just hold stocks, you try to get some bonds, hold it. Sometimes you hold it 70-30, you hold it 50-50, and several other analysis like that. Before you are looking, if you are looking for a particular company to buy into, several things that you want to look for, whether the company is highly valued, whether it's undervalued, several of those kinds of things. Whether you're looking for the big kinds of companies, several kinds of analysis that you need to do. It's a whole lot, guys. It's a whole lot, guys. But even at a beginner level, if you can do the three things I said, I guarantee you that at least to a reasonable extent, you can be safe. If you do proper analysis, you do your findings, make your findings about that company. Who is the company? I mean, some person just go and buy any company because they heard of that particular company. Most of the times, I would advise new investors that don't buy into any company that is not known. Don't buy into any company that is not known. Any company that is only operating in your country, it's very risky. It's very, very risky. Buying into a company that only operates in your country, it's very, very risky. So if you're a new investor, if you're not an aggressive investor, because most new investors are defensive investors, if you're a new investor, don't buy into your country. You can look for organizations or companies that they operate in your country as well as operating in other countries. There are several organizations there. Those are the kinds of companies you want to look for and you want to hold. So those are some of the advices I can give to new investors. But really, if you can analyze the organization, what are you looking for in analyzing? What kinds of company are you buying into? Who are their managers? Who is managing the company? Next, you start to check the track record of the company. The last 5 years, the last 10 years, have you ever reported a bankruptcy? Have you ever reported liquidation? Have you ever reported that the company was about to run down and maybe they had to borrow money? You see, one of the biggest things I try to avoid is that if I see companies that borrow money to maintain the organization or to bring the organization back to life, I try to avoid those companies. Why? Because I'm a defensive investor. I don't want to put my money into places where I put my money this year and suddenly I start to hear stories that touch the heart. But that's another story for another day. Really, that's another story for another day. But my advice is that look for organizations that operate in your country and outside your country, not just in your country. When you are doing that, take a look at the organization, analyze the organization, look at the managers, look at what they have been doing over the past few years, look at all of those things. After you're done looking at all of those things, start to look at their financial statements. Oh, you said you stop talking. I'm truly disgusted. Amazing, amazing. You don't have to wait here if you are not getting any value. You don't have to wait here if you're not getting any value. So, like I was saying, um, you look at their books, you analyze their books, look at what they are saying, look at what they are talking about, and several things like that. Those are some of the things that you look at. Those are some of the things that you analyze before you decide to take the step of buying into a particular issue or into a particular stocks. So I trust that we've learned one thing or the other tonight. I trust we've learned tonight. If you've learned, type you've learned, type I've learned, type I've learned. If you've learned something tonight, type I've learned. All right, amazing, amazing, amazing. So that will be all for tonight, guys. I'm in the coming weeks. I'm going to be talking a bit more about some of my findings, some of my learnings about stocks trading, about how you can journey in stocks as a beginner. You don't have to be really knowledgeable. You can get at least the barest minimum of doing your due diligence. I've spoken about some of those things tonight. There are some other things that you can also learn. You don't have to maybe go to Wall Street or go to the SEC's office or work at SEC or look for a very fancy tool. At least from your bare minimum, you can start to do some bits of analysis, fundamental analysis, several kinds of analysis that can put you on the right track. So thank you so much, guys. Thank you so much, guys, for sticking around for tonight's session. I trust we've all learned. I trust we've all learned. Thank you so much, guys, for sticking around. And if you've learned, type I've learned. I've learned. Oh wow, amazing. Ayabami says she has learned. I'm so glad. I'm excited. I'm excited that you learned. Thank you so much, guys. See you again next time we go live. Cheers, guys.